You can't be good at everything in 2026. You can't optimize everything in 2026. The fantasy still alive in that you've got to be highly automated, you've got to be deeply relational, and you've got to be highly profitable all at once.
Can you keep all four of those wheels on the wagon
all at once? I don't think you can. Most firms are trying to sit between at least two of these positions. You've got to choose what you want to be known for. The firms that win in 2026 are not going to be the ones with the best tools, people. They're going to be the ones who make the clearest choices. You can't be good at everything in 2026. You can't optimize everything in 2026. This is the Accounting Voices show, and I'm telling you what's going to be relevant in 2026 to help you stay in the game, stay relevant, and stay informed. After diagnosing the fault lies in accounting, as we did in the last episode, this one forces the trade-offs most firms, most individuals are avoiding. I'm going to help you make some decisions that's going to make this a better year for you. So yeah, in the last show, I said 2026 was a sorting year, and I gave you 4 fault lines that are split in the profession. First, we talked about AI adoption, then client expectations, then leadership and succession, and then ownership and business models. That was a diagnosis episode, if you like. It's telling you what's coming up and saying which side of those are you going to be on. Today, I'm encouraging you, and we always give some practical takeaways on this show, to make some choices, make some hard choices. I'm Rob Brown, your host. We're on YouTube, we're on all of the podcast platforms. The show's been going a number of years, and we reach out to accountants all over the world that want to get in charge of their own career and be more informed and more relevant, build their personal brand, have more of a say in the way their career goes. So the truth about most firms and most individuals is uncomfortable to admit because we're accountants. I'm part accountant and I'm a former high school math teacher. So I've got some of what you've got in the blood. We can't optimize for everything at the same time. We want to be good at everything. We are the trusted advisor. We are the expert. But every firm is already choosing a different direction, and professionals working in those firms are having to choose different directions as well. They've got to be on one side of the fence or another. So I'm going to go through these choices that we've got. And the only question is whether your choices are intentional or whether they're going to happen to you by accident. I want to help you make these choices in an explicit, controlled way where you've got flexibility, you've got autonomy, you've got power, so that you can move your career forward in the fastest possible way if that's what you want, or give yourself the maximum amount of choices. So the fantasy still alive in many accounting firms is that you've got to be highly automated, you've got to be deeply relational, you've got to be talent first, and you've got to be highly profitable all at once. And that's not me. You can look at any accounting website, any accounting firm, corporate brand, and they will say all of those things. We're highly automated with all the best tech and all the AI. We're deeply relational and we're client-centric. We're talent first. We look after our people. We are a forever firm. We develop our people. We do coaching, and we're highly profitable. Can you keep all 4 of those wheels on the wagon all at once? I don't think you can. And 2026 is going to find out whether you can or you can't, as an individual and as a firm, because every firm is making trade-offs, whether they realize it or not, whether they acknowledge it or not. So in this episode of the show, I want to share with you 4 dominant strategic positions that firms are drifting into. Some of them are going into them very intentionally and they know on what side of it they want to be, but most firms are drifting into these. So these are not labels, these are not theories, these are realities. So number 1 is the automation-led firm. You might be in one of these. AI handles most of the production work. The firm optimizes for efficiency, for scalability. The margins come from volume, from standardization. The human input is focused on oversight and exceptional handling. You've got the processes, you've got the automation, you've got the tech, and you can be an automation-led firm, and it's super efficient, and that might be very attractive to private equity. And this choice gives you 3 things. It gives you predictable delivery because everything's systemized. You've got SOPs or checklists or playbooks for everything. It's scalable economics, which private equity likes, and it's lower dependency on individual talent, individual people, maybe even leadership. That's the upside. The downside is it's going to cost you deep client relationships because automation and relationships don't go well together, do they? The second thing it's going to cost you is bespoke advisory options. If you're offering advisory services to your clients, if you want to give that perception, that doesn't sit well with automation. You've got to be really clever to balance those two. And the third payoff is that you've got to give up differentiation beyond price and speed, because that's where you've got competitive advantage. If you're automating your firm, you've got price and you've got speed on your side, but you can't differentiate in any other ways. So that's that first choice. What kind of a firm are you going to be? Kind of an individual are you going to be? If you're all about the automation and the tech, then you've got predictable delivery, scalable economics. You've got a lower dependency on personnel, but you will give up deep client relationships, you're going to compromise your advisory capabilities, and it's going to be hard to differentiate beyond price and beyond speed. The second choice you've got to make, or decision you've got to make, is are you going to be a relationship-led firm? Not an automation-led firm, but a relationship-led firm. So this firm optimizes for trust and personal connections and deep relationships, and maybe a referral-based growth system, because people are going to love you so much, they're so close to you, they never leave, and they refer other people to you. So these firms are optimizing for the trust, for the personal connection, and that means clients value access to named advisors, probably partners. The service is human first, it's tech-enabled second. And a lot of firms do this really, really well. And the growth comes through loyalty and through referrals. Now, again, there's upside and there's downside. So this choice gives you strong retention with clients, a strong book of business, probably the rigor, the robustness to put your prices up. So that gives you the second thing, which is pricing confidence, because you're definitely worth it. And it gives you high trust environments, both for your people and for your clients. But it's going to cost you scalability. It's going to cost you consistency of performance, because it's humans, relationships. We're emotional creatures. We're complex creatures. It's hard to standardize that. And it gives you exposure to key person risk. If you've got very charismatic personalities that hold a lot of relationships and it's one-to-one, those are very baked in, aren't they? So you're at risk if one key relationship goes. So upsides and downsides to being a relationship-based accountant, a relationship-based firm. You're all about the people, or you're all about the automation. Decision number 3, the specialist advisory firm. Is this you? Do you want to be that advisor? Do you want to plant that flag on your brand? And this is the firm that chooses depth over breadth. So you're probably serving defined niches. You're building expertise that clients can't easily replace, because you know their world, you understand their problems, you speak their language, you adopt their vocabulary, you go very deep in there, and you know what's coming up for them. You can benchmark their industry against others, and you can speak with a huge amount of authority into their world. And the technology is supporting the insights, not the volumes. So there are upsides to this. First, it gives you massive authority and credibility in your space that's very hard to replace. The second is it gives you premium positioning, and that means premium pricing. And the third is it gives you strategic relevance. You can occupy a very specific place in your market. It gives you huge competitive advantage. The downside on what this choice, if you go for it, if you want to be that specialist advisory firm, what this is going to cost you is market size. You can't grow as well because you're not wanting to be all things to all people. You're going to pay in some flexibility because you're laying down, this is the way we're going to work, and we're going to move away from the compliance side of things. And it's going to depend on specialist talent, because you're going to need people in your firm that can deliver on that advisory promise. And the problem with accounting firms over the years has been, we don't know how to price advisory, to package advisory, to deliver advice-based, future-based services, and so we're not going to do it. Or we're going to wait till we've got people in that have those gifts, and we'll scale up from there with advice. So let's go to the fourth two-sided coin. Is the scaled platform firm. So this firm optimizes for ecosystem control. Let me tell you what I mean by that. It integrates software, services, data, probably got PE backing because there's a huge amount of back office resource that's needed there, or indeed some kind of networked capital. Growth comes through consolidation, platform leverage, roll-ups, buying, acquiring, merging, and this gives you, as 3 upsides, it gives you huge reach, it gives you massive investment power, and it gives you a lot of strategic options. Now, as always, the other side of the coin is you're going to lose some autonomy and independence. Definitely. You're going to lose some cultural intimacy with your people, with your clients, and you're going to lose a local identity because you're going to be part of something bigger than you, probably some national or international conglomerate. And all of these decisions are uncomfortable because if you want something good, you've got to give up something good as well. You can't be everything. This is what I'm saying in this episode of Accounting Voices. Most firms are trying to sit between at least 2 of these positions. Now, I'm not saying they're opposites. They're all in the mix, but you've got to pick your lane. You've got to choose what you want to be known for, what you want to be strong for. A lot of firms want everything. They want the economics of automation and the profitability there. They want the trust and reputation of great relationships. And they want the authority of being specialists and they want the scale of a platform-based offering. And that tension is going to show up in any leadership, in any boardroom. It's going to show up as confusion, confused teams, confused messages, confused clients, confused leadership. The firms that win in 2026 are not going to be the ones with the best tools, not even the best people. They're going to be the ones who make the clearest choices and stick to those choices, because clarity is always going to beat activity. I'm Rob Brown, your host, and in 2026, I am taking on a couple of accounting firms that want to run their own podcast. So there's two elements to a podcast: a show, and it's all done with video, because video is the future. There's an internal private podcast if your firm is big enough, and particularly if you have had a lot of movement, consolidation, maybe private equity is involved in your firm, changes in leadership, in talent, in leadership, in expertise, and the messages are not going through quick enough. Your internal comms, you're doing your town halls, you're doing your internal memos and your Zoom or Teams calls and trying to get the message over. This is where we're going. This is who I am. This is what I'm doing. This is my vision. Here is our strategy. With bigger firms, they don't always trickle through. So an internal mechanism where I would interview your leaders and your key people and your heads of service lines and your heads of offices and give them visibility throughout the firm. This is a private link that only people in the firm can see and access and listen to. And that goes on your intranets and on personal links. And that is a great way of communicating with your people in a human way, very, very quickly and at scale. And I'm that external industry expert voice that will ask the tough questions and make sure your firm shows up in the best possible way internally. And then we've got an external element to any show that you do, because this is your chance to brand yourself in the marketplace and get ahead with recruiting talent, with attracting investment or staying independent if that's what you want, in really nailing down your niche, your expertise, your client proposition, your talent proposition. It's having a presence out there in the marketplace. Otherwise, you're just relying on your website and you look and sound the same as everyone else. So that is on offer for 2026. I can take on a couple of clients. I have one big UK client that I do a podcast for. And if you want to talk about you and your firm, particularly in North America, where a lot of listeners, viewers are for the show, then have a chat with me on LinkedIn. Look, the firms that win in 2026 are not going to be the ones with the best tech, not the best talent even. They're going to be very, very clear on where they're going and what they're doing and how they get in there and what's going to get them there. And that's the message for you as an individual. You can't optimize everything at once. You can't be good at everything. And the best people, the best firms are already choosing. They're already picking lanes. And trade-offs are not weaknesses. Avoiding this stuff is a weakness. So remember, clarity beats activity in 2026. And as I often say on this show, if you think change is hard, try not changing, because confusion and waiting and seeing has a strategic cost. Thank you for tuning in to Accounting Voices. I'm your host, Rob Brown. We'll see you on the next episode, where we'll be talking about what happens as a result of these choices. It's going to be the consequences of your choices and what's going to happen on the other side of whichever ones you make. We'll see you on the next episode.